Hello, welcome back. So this is going to be a short educational and tutorial video whereby we go through what forex trading is. So this is a simple question. What is forex trading? Forex is an abbreviation for foreign exchange. Foreign exchange. That we have abbreviated to get the term forex. And it's a giant global market whereby the currencies of countries are being traded against each other. So simply put, forex is the exchange of one currency for another. So for example, a company like Dangote Cement, one of the biggest companies here in Africa, wants to purchase raw materials that they will use in manufacturing their cement. So something like limestone. They want to purchase limestone from a country like Japan. Since in Japan, they do not spend the Nigerian naira, Dangote Cement will have to convert or exchange their naira into the Japanese yen in order to purchase that raw material, the limestone, to be shipped to them. So in order for such transaction to go through successfully, that means Dangote Cement will have to exchange their naira into yen to make payment of that raw material to be shipped or transferred to them for them to use to produce their cement. So the example I just gave was just a basic overview, a bigger picture of what happens in forex and how it works. Okay, so retail traders like you and myself, what do we trade in forex? How does it work? And how are we going to make money? It's simple. We trade currency pairs. Okay, currency pairs. So the pair basically means two things that have been put together. So a currency pair in forex are two currencies of two different countries that have been put together. And with the naming, the first currency that comes first is called the base currency. And the second currency that comes at the end of the naming is called the quote currency. So we have two currencies such as the euro and the US dollar that they've put together to achieve or for us to get what we call the euro USD or the euro dollar. So there are several currency pairs in forex trading that are available for you and I to trade. I believe now you have a basic picture of what a currency pair is. So how do you and I make money trading this euro USD or these currency pairs? It's simple. We are going to place a trade with the mindset or the prediction that such currency pair is going to rise up or dip lower within a given period of time. And that fluctuation that occurs within that period of time, if it goes in our favor, that's how we make money. So a currency pair shows the value of one currency against the other. And when you come into forex trading, there are three main types of currency pairs. We've categorized the pairs into three main types. The first one is the major pairs. It is the most traded currency pair in forex trading, and they are the various pairs that contains the US dollar in them. So for example, euro US dollar, GBP US dollar. GBP stands for Great Britain pound. Let's say USD CAD, US dollar Canadian dollar. Okay. The second type of pair that we have in forex trading is the minor pair. Most people also call it the crosses. So they are the currency pairs that do not involve the US dollar. Okay, so a currency pair like the GBP, Great Britain pound, and CAD, the Canadian dollar, or the GBP and NZD, New Zealand dollar, or let's say the AUD, Australian dollar, and JPY, Japanese yen. So any of these currency pairs that I mentioned did not involve the US dollar. So whenever you see a pair in forex that doesn't involve the US dollar, you know that's a cross pair or a minor pair. And lastly, we have the exotic pairs. So with the exotic pairs, it involves any of the two types of pairs that I just explained, and a currency from an emerging economy or a currency from a country that is developing. So for example, let's say a country like Kenya, Ghana, Uganda, South Africa. These countries are not developed. They are not big. They do not have bigger economy. So when you pair the currency of these countries with a major economy like US, Canada, UK, their currency, that's when we form or we get an exotic pair. So for example, USD ZAR, which is the US dollar and South African rand, or USD NJN, US dollar and the Nigerian naira, or USD JHS, the US dollar and the Ghanaian cedis. That's an exotic pair. In Forex, we have what we call market sessions, and they simply refers to the times that the financial market opens and closes. And there are 4 types of these market sessions. They are the Tokyo session, Sydney session, New York session, and the London session. Mostly, we refer to the Tokyo and Sydney session as the Asian session, okay? And we have the New York and the London session. So with the market session, let me break it down a bit. Just as we have companies or works that opens in the morning and closes in the evening. So for example, let's say with the London session, it opens in the morning in London, okay, and closes in the evening. So whilst the London session is closing in the evening, elsewhere in somewhere, let's say Tokyo or Sydney, it is morning there. So their session is now opening in the morning. When the Tokyo session is also closing in the evening, it is somewhere morning, let's say in New York. So the New York session also opens. So this becomes a cycle, okay? They overlap with each other. Each session opens for 8 hours, and before that 8 hours elapses, another session opens and it overlaps. So that is how the market sessions they work. Each opens for 8 hours a day, and they tend to overlap on top of each other. So in this video, we talked about what Forex trading is, how it works, and the sessions we have in Forex trading. Thank you very much for watching up to this far. Kindly comment under the session any question that you may have, or if you want to ask me any question regarding this video, if something is bothering you, you do not understand anything, and you would like me to elaborate more on that, you are welcome to ask under the comment section. Thank you very much. Kindly like and subscribe, and stay tuned for the next video.